What if you could make your debt disappear? Not in 30 years, but much faster. Imagine waking up one day and realizing that the weight of your mortgage, car loan, and credit card bills is finally lifting. For so many people, debt feels like a never-ending mountain. But what if there was a way to start climbing down step by step, right now? Imagine a strategy that attacks your mortgage, car loan, and other bad debt, chipping away at it every month, without you lifting a finger. This isn't about working overtime or sacrificing every little joy. It's about putting your money to work for you, so that every month your debts shrink automatically, almost like magic. This isn't a fantasy or a trick for the super rich. It's called a cash flow positive investment property. Ordinary people are using this approach every day to take control of their finances and rewrite their future. You don't need to be a millionaire or have a trust fund to get started. Picture owning an asset that pays for itself and generates extra cash every month. Instead of draining your bank account, this property puts money back in your pocket, money you can use to pay down your debts faster than you ever thought possible. This isn't about waiting decades for appreciation, it's about creating an active income stream to destroy your biggest debts. Every rent payment you receive is like another hammer blow against your mortgage, your car loan, or your credit cards. We'll break down how this works step by step. You'll see exactly how to find the right property, set up your finances, and start seeing results. No guesswork, just a clear path forward. Forget just paying bills. This is a proactive strategy for financial freedom. It's about taking control, building wealth, and finally breaking free from the cycle of debt. You don't need a fancy degree or a big inheritance, just the right knowledge and the courage to start. With the right guidance, anyone can build their own debt-crushing machine and change their financial story. By the end, you'll see your mortgage as a solvable problem, not a life sentence. You'll realize that financial freedom is within reach and that you have the power to make it happen. Ready to build your debt-crushing machine? Let's get started. Your journey to a debt-free life begins right now. Cashflow is the heartbeat of real estate investing. It's the steady pulse that keeps your investment alive and thriving, no matter what the market is doing. Without positive cash flow, even the most beautiful property can become a financial burden. Think of cash flow as the lifeblood that keeps your real estate business healthy. It's what allows you to weather storms, cover unexpected expenses, and sleep soundly at night knowing your investment is working for you. When your property generates more income than it costs to own, you're not just breaking even, you're building wealth, month after month. Cash flow positive means your rental income exceeds all expenses, leaving you with real spendable profit. This is the money you can use to pay down debt, reinvest, or simply enjoy the rewards of your hard work. Let's run the numbers. Imagine you buy a duplex and rent out both units for a total of $2,500 per month. That's your gross rental income, the starting point for your cash flow calculation. Now let's talk expenses. You'll need to cover your mortgage, property taxes, insurance, repairs, vacancies, and management fees. In this example, all those costs add up to $2,025 each month. Subtract your total expenses from your rental income. $2,500 minus $2,025 leaves you with $475 in positive cash flow every month. That's money in your pocket, not just on paper. That $475 is your monthly profit, the engine of this strategy. Over a year, that's $5,700 you can use to pay down your mortgage faster, build an emergency fund, or invest in your next property. If your income and expenses are equal, you're cash flow neutral. No profit, but at least you're not losing money. But if your expenses are higher than your income, you're cash flow negative, and that's a dangerous place to be. Many investors hope that property values will rise and bail them out, but appreciation is never guaranteed. Cash flow is what pays the bills today and keeps you in the game for the long run. Always forecast all income and expenses conservatively. Build in a buffer for repairs, vacancies, and unexpected costs so you're never caught off guard. Don't just look at the mortgage, factor in taxes, insurance, maintenance, and vacancies. These hidden costs can eat away at your profit if you're not careful. It's always better to be pleasantly surprised by extra cash than blindsided by unexpected bills. Conservative estimates protect your bottom line. Consistent, predictable, positive cash flow is the foundation of your debt destruction plan. It's what allows you to pay down loans, build equity, and create lasting financial freedom. Get this right, and you're on your way to building a portfolio that works for you, not the other way around. Cash flow is your weapon. Use it wisely, and you'll have the power to conquer debt and grow your wealth. Now let's see how to put this powerful formula to work in your own investment journey. Now you've got $475 a month in extra cash flow. What's the smartest move? Use it to attack your bad debt, your home mortgage, car loan, or any loan that drains your wealth. Bad debt isn't tax deductible and doesn't make you money. It's a pure liability. Direct your rental cash flow straight at your mortgage principal. Every extra dollar paid saves you years of interest and thousands of dollars. Suddenly, you're on offense. Your investment property is fighting your debt for you. Watch your loan balance shrink faster than you thought possible. Good debt, like your investment property loan, is tax deductible and tied to income-producing assets. The strategy: use income from good debt to destroy bad debt. This is how you make your money work smarter, not harder. Let's see how to turn this into a repeatable system. Let's break down how you can transform your mortgage debt into a powerful engine for building wealth, step by step. This process is all about using what you already have, your home and its cash flow, to create a cycle that keeps working for you year after year. Step 1. Start by using the positive cash flow from your property to make extra payments on your home mortgage. Even small, consistent extra payments can make a big difference over time, reducing your interest and helping you pay off your loan faster. As you do this, your equity grows. Imagine after a few years, you've built up $25,000 in equity, money that's now working for you, not just sitting in your home. Step 2. With that equity, you can open a home equity line of credit, or HELOC, for $25,000. This flexible loan lets you access your home's value without selling it, giving you the power to invest further. Use the HELOC funds as a down payment for your next investment property, one that's cash flow positive from day one. This means the rent covers the expenses and puts extra money in your pocket each month. Here's a bonus: the interest on your HELOC, since it's used for investment, is now tax deductible. This can lower your taxable income and boost your overall returns, making your money work even harder. Step 3. Purchase property B. Now, you're earning rental income from 2 properties, and your monthly cash flow increases. Each new property you add multiplies your earning potential. Combine the cash flow from both properties and use it to pay down your mortgage or HELOC even faster. The more you pay down, the more equity you unlock for future investments. As your cash flow grows, you accelerate your debt payoff and build equity at a faster rate. This creates a positive feedback loop. Your wealth grows as your debt shrinks. Repeat the process. Tap into new equity, buy another property, and keep the cycle going. Each round makes the next one easier and more powerful. Every new property you add increases your passive income, speeds up your progress, and brings you closer to financial freedom. This is debt recycling in action, a true snowball effect for your wealth. The more you roll, the bigger it gets, and the faster you move toward your goals. The more you repeat this strategy, the faster your wealth accelerates. It's like putting your investments on fast forward. Remember, this is a system, a repeatable process, not just a one-time trick. It's designed to keep working for you, building momentum with every cycle. Over time, the effects compound. Your wealth grows exponentially, your debt shrinks, and you move closer to true financial independence with every step. This isn't just compounding interest, it's compounding entire income streams. Each new property multiplies your ability to buy the next one, creating exponential growth. With 1 property, you save slowly. With 2, you save faster. With 3, you accelerate even more. Soon you're throwing thousands at your mortgage every month. A 30-year mortgage can be wiped out in 10 years or less. Meanwhile, tenants pay down your investment loans, your properties appreciate, and you get tax benefits. Cash flow is the active engine, but appreciation and equity are working in the background. This is how ordinary people build multi-million-dollar portfolios, 1 property at a time. The key: start with 1, then let compounding do the heavy lifting. The sooner you start, the faster you build. Now let's talk about the risks and what it really means for you. The biggest threat? Losing cash flow, usually from vacancies or big, unexpected repairs that can catch you off guard. If your property sits empty or suddenly needs a new roof, you still have to pay the bills. Rising taxes, insurance, or interest rates can also quietly eat into your profits over time. Always budget for repairs and keep a cash reserve for emergencies, no matter what. Lock in fixed interest rates when possible to protect yourself from surprises. Run your numbers conservatively and always plan for the worst-case scenario. A well-prepared investor weathers storms. A careless one can get wiped out quickly. Build resilience, not just returns, and you'll thrive in the long run. So how do you succeed? Follow a clear blueprint. First, educate yourself. Know your market, analyze deals, and learn from experienced investors. Second, focus on reliable, consistent cash flow. Choose properties in stable neighborhoods with strong demand. Third, be patient and disciplined. This is a long-term strategy, not a get-rich-quick scheme. Stick to your plan, keep saving, and keep making extra payments. The power of this system reveals itself over years, not months. Finally, take action. Knowledge is useless without execution. Start analyzing deals, talk to lenders, or save for your first down payment. Don't wait for the perfect time. Start now. You have the blueprint and the tools. Build your plan, take the first step, and let compounding cash flow do the rest. Your debt-free future is within reach. Start building it, 1 property at a time.